Welcome back to Fast Market here on the Schwab Network. We had markets turn around where the S&P 500 jumped over 0.5% from its session lows. President Trump was giving some commentary on tariffs. He said tariffs are a good thing, and I think maybe a potential ceasefire. He talked a little bit about that between the Ukraine and Russia, also lifting equities off of those session lows. So we'll keep an eye on headlines. He's always willing to speak his mind. He says tariffs are a good thing, build more plants here in the U.S., kind of reiterating his thoughts here on tariffs. All right, let's get into our next segment. That's cash tags. And for that, let's bring in our next guest. It's going to be Andy Swan, co-founder of Likefolio. Welcome back to the show, Andy.
Thank you. Happy Friday.
Happy Friday to you. Tesla getting a little bit of a bump here, but it's been a rough ride, Andy. I know there's a lot of outlying political, things that are happening, and that's what's punishing the stock partly. But then we've seen a slowdown in sales numbers also. What kind of data are you guys seeing? I mean, it's got to be crazy, the amount of tweets and stuff that you guys are reading as far as sentiment data goes.
Yeah, it's almost incomprehensible how much people are talking about. Especially Elon Musk is a lightning rod. He always has been. I think, now he's gotten very involved politically, and it's cost the Tesla brand some of its cachet, some of its value. You've got Tesla owners out there getting targeted by some crazy people here and there. So a lot of bad things happening on the brand side of Tesla. I think, that can also turn into a positive. I think that now it's pretty clear that the Tesla brand and the idea of owning an EV is being opened up to an entirely new set of people, an entirely new demographic who maybe agree with that lightning rod. So we'll have to see how that all plays out. But what we like to focus on really is, what's going on kind of under the hood. And what's really happening is, Tesla has still the best-selling car in the world, the Model Y. When we look at what's going on in China, where they're far less concerned with American politics. As soon as the Model Y came out, you can see on the right side of the chart, as soon as the Model Y came out, sales, absolutely up and to the right, growing with every period that's being monitored. And this is a refresh of the Model Y, the most popular car in the world, and people just love it. And it kind of hammers home our overall point, and that is, Tesla is what I would consider light years ahead of the competition. By the end of this year, they're going to have about 10 million cars in their fleet of vehicles, even though they're privately owned. I think you can call it a fleet because with the flip of a software switch, once comfortable, every one of those cars will have the opportunity to become full self-driving and potentially robotaxis. There's an enormous amount of economic leverage and asymmetric upside for this company that other auto manufacturers, other technology companies simply don't have. And so I think if you're looking long term, you have to see beyond the political firestorm of the day, and you have to look at the underlying technology, the global adoption, and most importantly, the potential of the fleet that's already on the road, this growing fleet, as a rolling AI software company and logistics company. It's a pretty incredible and exciting opportunity ahead of Tesla, as it has been for many, many years. So it's an extremely volatile stock, will remain so, but we think that anytime you get into Tesla, you just have to be willing to accept 50 to 60% drawdowns in exchange for the potential of 10x upside. And that's the asymmetric bet that is and has been Tesla.
So, Andy, I hear your bull case here, so I want to hit you with another question that's going to take the other side of this. Let's take the politics out of this whole situation. I agree with you. The vandalism in anybody's vehicle is not great. All right, so let's look at this. Edmunds had some data that came out here. Trade-ins on a year-over-year basis for at least the month of March increased by like 1.4%. 1.4% of total trade-ins were Tesla models in 2017 and older, right? This time last year was at 0.4%. We've seen lackluster sales when it comes to the Asia-Pacific markets, as well as the European markets. And then you have BYD that unveils this new charging capability that Tesla just does not have right now. So Giving that headwind, have you seen any data around the BYD, comments, any comments around BYD and that kind of breakthrough? Because I think that's very major. And then two, are you making the case that it's not so much selling vehicles anymore, it's going towards robotaxi and leveraging this fleet, and that's the new cash cow for this company rather than being just an automaker?
Yeah, I do think that is the dramatic upside of the company. I think that they can continue to sell more and more vehicles at lower and lower prices, but with pretty stable profit margins because of their extraordinary production capabilities that they've built out. But yes, I think that the asymmetric upside from Tesla comes from full self-driving. It comes from subscriptions in the cars that already exist. It comes from monetizing those cars as robotaxis, along with some of the semi tractor stuff that they're trying to do. In terms of BYD, I think it's really interesting. I haven't studied in depth the charging capabilities. It sounds extremely cool, and it sounds like a great challenge against Tesla. I think that's probably one of the biggest risks that Tesla faces is a company like that coming from out of left field with some step change in the technology or the innovation. That's clearly that, and Elon Musk himself are the two biggest concentration risks for Tesla. But when we look at the overall product cycle that Tesla normally goes through, this kind of decline in sales is pretty natural for this company. They tend to go in waves. They tend to, come out with new models a little bit too late in terms of, they let sales degrade for a little while first, and I think that's what happened. That's what's happened here. So we expect the new Model Y is going to sell extremely well, and we expect that Tesla will announce a car, in the $25,000 to $30,000 range that can blow it, or even less. That could blow away the overall American economy car market and really open some significant doors. But we'll have to wait and see on that. I think this is a company that's earned the right to have some significant drawdowns and earn the right to have the benefit of the doubt in terms of execution of an overall grand, large strategy.
So, Andy, I'm going to follow up here, and I want to balance this out before I get the DMs around me being a Tesla hater here. The chart actually looks really good. What is in your calculus when it comes to the humanoid robot? Do you kind of believe in that vision as well, or is that something that's a little bit more, 20 years out viability when it comes to actually driving revenue?
Yeah, for us, we don't model that in at all. I consider that just a moonshot that you get in the price of Tesla. You get this moonshot, which is humanoid or these type of robots that could be personal assistants, factory workers, et cetera. There's an enormous potential market there, but I don't see any reason to model that Tesla is going to be the one to win it, other than they have a CEO and a team that tends to execute really, really well on moonshot plays like Starlink, like Neuralink, like SpaceX. This is a guy and a group of people that tend to win. And so I think you can at least put it, some valuation on that moonshot, but I wouldn't put it in anything in the next few years.
Yep. This is definitely one of those bifurcating stocks that you either love it or hate it, maybe. But you better have your big boy trading pants on when you're putting out positions in this one. All right, great stuff. Great data as always, Andy. Have a great weekend.